Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the forecast for the coming week. So this is the dollar index and this is the weekly time frame. Last week we clearly saw, and or the previous week, how prices have been reacting at the daily bearish order block. In confluence, we can see this weekly breakout block. So what we can clearly see is we saw how price returned last week into the weekly fair value gap last 2 weeks, and then for the previous week we saw how we had this movement back into the weekly fair value gap, and we saw how volume closed above the consequent encroachment of that weekly fair value gap. So last week I told us to expect more bullish movement of price to the upside, looking forward to see how price will take out the buy side liquidity. But what we can clearly see from the weekly time frame is that we had the bullish movement, but then price did not take out the buy side liquidity. Price still respected the daily bearish order block, and then we can see how price gave us this movement again back to the downside. But what we can see is we have the clear of this sell side liquidity, we have the sweep of the sell side liquidity and bullish up close candle, and then we had this bearish movement, price still respecting the consequent encroachment of the weekly fair value gap. So basically now, from what we can see, price is just respecting two sponsorship zone, the bullish weekly fair value gap, and we can now clearly see this other bearish order block from the daily time frame, which is in confluence with the weekly breakout block here, which we can clearly see here from the weekly time frame. We have this breakout block, so we can see where price is just reacting at. So basically it says just like we had range movement here, because price, now we can see volume did not close above this bullish, neither did volume close below this bullish candle low points. So basically now let's just go to the daily time frame. So now in the daily time frame, what we can clearly see is the mitigation of the weekly bullish fair value gap, and we can see how price is still respecting this bullish weekly fair value gap. So we can see that bullish movement took out this bearish order block, and we can see left the buy side draw on liquidity. So price created another buy side draw on liquidity, and clearly what we can see, this return came to fill up this gap again, and we can see mitigation of the weekly fair value gap respecting the mean threshold, the consequent encroachment reacting at this rejection block, and we are seeing bullish momentum. So clearly now we can see we have the sweep of this low point, and we can see bullish movement to the upside. So for the dollar index, if price continues sincerely bullish, then I'll be looking forward to more bullish move, and this is the draw on liquidity I'll be looking forward to. This is the first draw on liquidity from the daily time frame. So basically now let's drop to the 4-hour time frame. Here in the 4-hour time frame, what we can see is how price mitigated that weekly bullish fair value gap. We have this market structure shift we had for the bullish movement to the upside. When we had the market structure shift, we had this liquidity gap, price return, took out sell side liquidity, reacted at this gap, and then we had the push of price to the upside. Now price reacted again back at the daily bearish order block and sponsored bearish movement to the downside, price returning back into the weekly fair value gap, and we can see how price is respecting the mean threshold. Now we have this bullish push of price return respecting this 4-hour bullish order block, and we can see bullish push again to the upside. So from the 4-hour time frame, this is our buy side draw on liquidity. So we'll be looking forward to how we can see bullish movement to the upside to this first draw on liquidity before we can determine if price is going higher to this other buy side draw on liquidity. Let's check the 8-hour time frame. So here in the 8-hour time frame, we can see we have this rejection block to the downside, we have this change in state of delivery, and we're seeing bullish momentum to the upside. Price is reacting at this fair value gap. So let's check the 1-hour time frame. So here in the 1-hour time frame, we can clearly see price respecting this bullish order block, failing to break below that bullish order block. We're seeing bullish push to the upside. So basically I'll be looking forward to see how price continues bullish to the upside, since I can see clearly that price is respecting this weekly bullish fair value gap up till now. So let's check the 4-hour time frame so that we can have less noise in the candles, so we can clearly see that. So price is still giving us a reason for a bullish push. So this should be the first draw on liquidity. So basically, I'll be waiting to see first the reaction of price at this level to determine if this is going to really go strongly bullish to take out the buy side liquidity resting here, and in extension this buy side liquidity. So basically, if I'm looking for a bullish move, this will be the first price level I'll be looking at before further continuation bullish, or we could see bearish reason to the downside. So this is my expectation for the dollar index. Let's check out the Euro USD pair. This is Euro USD and this is the weekly time frame. So we can see, you know, I've been calling out this open close price from the weekly time frame, how we had the reaction of price and sponsored the bearish movement to the downside. You know, clearly from the daily time frame, we saw the bearish order block at the open close price in the weekly time frame. So basically now, this is our drawn liquidity to the downside here. What we can see is that price have been reacting to this sponsorship zone here in confluence to this weekly fair value gap. So we can see we have the sweep of sell side liquidity and we had sponsored bullish movement of price to the upside. So what we can now clearly see now, we have the sweep of this buy side liquidity and we're seeing bearish movements. Though we can see this candle is giving us like a doji candle, indecisive candle, but we can see that volume still closed below this weekly low points. So we could see the possibility of bearish movement to the sell side draw on liquidity. So the daily time frame, what we can see from the daily time frame, you can see clearly the open close price is the bearish order block here in the daily time frame. You know that the market is bearish. We're having bearish movement to the downside. So, you know, clearly when we saw this bullish move, we said if price is going to really continue bullish, then we would want to see price may trade to this fair value gap identified from the weekly time frame, taking out this high points. But we can see price respected the open close price from the weekly time frame, which in the daily time frame we can see we have this bearish order block and we had the bearish movement of price to the downside. So last week I told us to expect to see bearish movement to the downside to this bullish daily order block, and then we can decide if price is going to continue strongly bearish or we could see bullish reaction back into this daily breaker, and that is what we can see clearly happen. We had bullish reaction back into this daily breaker block, and now we are seeing bearish movement of price to the downside. So basically this is the weekly drawn liquidity. From the daily time frame, I have this drawn liquidity. In extension, I have this swing low point as the next drawn liquidity. We can see price mitigated the daily breaker block, and we can see how volume closed below that, and now we can see this bearish momentum. So we could see the possibility of for the bearish movement to take out the sell side liquidity in extension, this other one, and the weekly sell side liquidity, because already we can see price have reacted at this bullish order block from the daily time frame. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is the reaction of price at the daily breaker, and we can see how price gave us bearish movements, a return back to mitigate the daily breaker zone, and we can see this bearish impulse. What we can see now is we have an inversion fair value gap here, because we can see this is an inversion fair value gap because price reacted, went up, but then came back and broke through it. This is a valid inversion because it also sponsored movement that took out liquidity. We also have this inversion fair value gap. Price return respected that and dropped. Now we can see here we have this fair value gap. So if we're going to continue bearish to the downside, you know, we have this sell side liquidity, this sell side liquidity, and in extension, this sell side liquidity. So basically, we'll be waiting to see the reaction of price back into this fair value gap in the 4-hour time frame, and then we have the bearish continuation to the downside, having this as our drawn liquidity and this one also as a draw on liquidity, and in extension we have this. So let's check the 1-hour time frame if there is anything we could possibly see there. So from the 1-hour time frame, where we have the 4-hour fair value gap, we can just see this candle weak. Yeah, so we could just see a return and we have bearish continuation. But clearly now price is reacting at this 1-hour bullish order block. So that is what we can clearly see. Let's go back to the 4-hour time frame now, which is the main threshold of this bullish order block from the 4-hour time frame. Let's check the 2-hour time frame, guys. So we can also see we have this 2-hour bullish order block, but you know, price is bearish, so we could see price violate this. So we could see a push into the fair value gap, which is from the 4-hour time frame, and then we can have bearish continuation to the downside, except price really respects this bullish order block and then sponsor bullish impulse to the upside. But I'm looking forward to both scenarios. Let's just see how price delivers on Monday, and then we can determine strongly if this is going to just aim for the sell side, or we could see a bullish push of price to the upside. So this is what I have to show us, guys, in the Euro USD. Let's check out the GBP USD pair. This is GBP USD and the weekly time frame. Price have been respecting our mitigation block we identify, and we can see how price now gave us this fall to the downside into this bullish order block. So what we can see is this is an indecisive candle. Volume did not close below, neither volume above, but we can see we have sweep of this other weekly candle swept this previous week, and now this swept this. This is just crazy in the GBP USD from the weekly perspective. So we could just see bearish continuation to the downside. This is the first sell side liquidity. In extension, we have this. That is, if the DXY really goes bullish for the coming week. Let's check the daily time frame. So here in the daily time frame, we clearly identify from the daily time frame we had this rejection block, which you can also just redefine as your bearish order block when you consider the bearish colored candle, and we can see how price respected that. And what we can see, this return first into the rejection block, price fell. I told us for the previous week to expect more bearish movement of price to the downside, and we can see that bearish impulse, and now we can see return back to the upside. Price still gave us bullish move, swept this high point, but volume closed below, and now we had this bearish movement to the downside. So basically, I'm looking forward to the sell side liquidity to be taken. In extension, if this is going to continue bearish, if the DXY goes bullish, they will be looking forward to the sell side liquidity and would have this first as a reference, this bullish order block, to look at reaction of price at the bullish order block from the daily time frame before we can consider if price is really going to aim for the swing low points here from the weekly time frame sell side liquidity as an extended draw on liquidity. So from the 4-hour time frame, what we can see from the 4-hour time frame is clearly we identify how price respected this 4-hour bullish order block and sponsored this bullish movement after the delivery of price on Monday. This is a sharp delivery of price on Monday down to this bullish order block, taking out the sell side liquidity, and that same Monday we start having the bullish reaction to the upside after this bearish movement to the downside that took out the sell side liquidity, mitigating the bullish 4-hour order block. So now what we can now see is price took out sell side liquidity, reacting at our daily rejection block zone in confluence to the weekly zone, and we had this bearish fall to the downside. I look forward to this return into this fair value gap, and we can see this fall. So you can see we have this draw on liquidity and we have this fair value gap here. So basically, I'm looking at price giving us more bearish movement to the downside into this fair value gap. Price violating this fair value gap, we act as an inversion fair value gap to further sponsor bearish movement to the downside to the sell side draw on liquidity. So basically, this is what I'm looking forward to also in the GBP USD pair. So guys, let's check out the gold pair, and we're going to look at the US30 and also the E-minis. This is gold from the weekly time frame, and basically what we can see in gold is this bullish impulse, this bullish movement that we've been leveraging the past few weeks for our bullish trade setups. So let's just go to the daily time frame, where basically I'm looking at the reaction I'm expecting to see. So basically, since we're still in bullish momentum, we shouldn't really want to frame a strong bearish movement yet. So gold give us that structure for the bearish movement, so we should maintain the bullish movement. So basically now we have the sweep of buy side liquidity, and clearly we can just see we have this fair value gap below here, and basically this is going to act as a sell side liquidity, because in a lower time frame we're going to see this as a valid pullback. So basically for the gold pair, I'll be expecting to see bearish movement into this fair value gap, and price may decide to dip more lower below the fair value gap before we can then begin to frame a bullish movement to the upside. So basically I'm looking forward to bearish movement, since we can see we have the sell side liquidity and below is the fair value gap from the daily time frame. Let's check the 8-hour time frame. So here in the 8-hour time frame, we can see, I told you we're going to see a valid pullback, and we can see sweep of liquidity. So we could look forward to bearish movement to the downside into the zone, and we could then begin to frame to look out for bullish structure to the upside. Let's check the 4-hour time frame. So the same goes for the 4-hour time frame. We have price swept this, so we can see we just have the fair value gap below here. So we could see bearish movements. If we have a clear change in state of delivery here, then we can go bearish to this fair value gap, because we can also see this daily fair value gap. We have another fair value gap here in the 4-hour time frame. So basically, if price is going to continue bullish, so I'll be looking at this bearish movement to the downside into the zone, and then frame the bullish continuation to the upside. So that is just what I'm establishing for the gold pair. So guys, let's check out the S&P 500. This is ES from the weekly time frame. What we can just see from the weekly time frame is we can clearly see basically structure is bullish, but from the most recent price delivery, what we can see is price took out this buy side liquidity. We had the fall to the downside. We can see that this weekly candle took out the sell side liquidity, and we can see volume closed above. So based on the weekly time frame, we can really frame an expectation, because we can see the possibility of more bearish movement to the downside since we have a sweep of this. Let's check the daily time frame. The daily time frame, we can clearly see, basically, if you understand correlation, then you get to understand what I'm trying to do with the ES. So we have from the daily time frame, we can see price is just giving us this form of a trend to the downside. We can see the sweep identified from the weekly time frame, and we can see prices giving a form of a bearish movement to the downside. We can see the daily candle here is giving us bearish impulse. So basically, we have this draw on liquidity. This is a sell side draw on liquidity if price is going to fall bearish to the downside, and we can see below that is this fair value gap left. So basically, I'm looking at more bearish movement to the downside, the possibility of bearish movements in ES. So let's check the 8-hour time frame. In the 8-hour time frame, what I identify is the reaction of price at this 8-hour bullish order block. So we could see how price may give us a reaction back into this bearish order block, or we could see price within this sell candle before this bullish movement, which would give us the breaker, how price would return, and we have the bearish continuation to the downside. So from the 4-hour time frame, I'm just giving us a very quick one. We can see trend is going here to the downside based on this, because we can see the fall, price return, failed to take out this, price fell to the downside. We have a break of structure here, price return to the upside. Now we're seeing this impulse to the downside. Though clearly here, price have not yet established a strong reason for a bearish continuation to the downside. But then since we can see prices reacting at the 8-hour bullish order block, in confluence in the 4-hour time frame, we can see at this open close price, this unmitigated weak. So we could look forward to this price delivery to the upside, and then we have the fall to the downside. Or if you're not willing to take an entry within this fair value gap, then you can wait for price to react at the fair value gap, falls to the downside to take this out, and then you can look forward to the return and the bearish fall to the downside. So this is my expectation in ES, except price possibly closes above the fair value gap, violates the bearish order block, and then it goes bullish. But then based on correlation, then I'm expecting to see this bearish movement in ES. So let's check out the US30. So this is a weekly time frame in US30, and what we can see is price reacting at this key level and sponsored bearish fall. We can see price took out buy side liquidity, and we have fall to the downside, but then volume is not giving us that impulse to the downside. It's giving us indecisive candles, and we can see price created this fair value gap in the weekly time frame. This return to tap the fair value gap, and we can see this rejection, and we further had a down close candle week. So in the daily time frame, what we can clearly see in the daily time frame is price mitigated the weekly fair value gap, sponsored this movement, but failed to take out this high. And now we're seeing price returning to the downside. So basically, we have this sell side liquidity as our draw on liquidity. So we'll be looking forward to see how price is going to further drop to the downside to take out this sell side liquidity. In extension, we identify from the weekly time frame that we have this bullish order block, and we can see here we also have another fair value gap. So if price is going to fall to the downside, then we're looking at the fall to the bullish order block. We have this fair value gap. So basically, these are the sponsorship zones that would attract price. This fair value gap, this other fair value gap, and in extension, the open price of the bullish order block. So from the daily time frame, we can see that the drawn liquidity is here. So basically, we're looking forward to more bearish movement. Since we can see based on the CRT, we're seeing volume taking more movement to the downside. And we can see here we have a change in state of delivery here. So we can see that the delivery is giving us bearish impulse. So basically, I'll be looking at this drawn liquidity to the downside for the US30. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is the return impulse bearish price pushed to the upside, and we had this fall. Price return mitigated this fair value gap, and we have another bearish impulse to the downside. Price left this other fair value gap. We can see clearly here we have this fair value gap that price left here. So we're seeing bearish impulse basically to the downside. So I'll be looking forward to see how price is going to give us the possibility of a bull reaction here. And then we have the bearish fall to the downside. We could see price react at the fair value gap here to give us bull reaction before we have the bearish continuation to the downside. So this is basically just a quick one. I'm not really going into more details in this focus, trying to talk about some certain sponsorship zones, the levels based on the PDRAs. So cheers guys, till I see you guys next week. Have a profitable trading week.